that we will have to take some precautions. So this is one more topic of yours. What are the precautions? You must be able to understand each and everything now properly, because we are in a way repeating all these very things. So for correct computation of national income by income method especially, we have to take these precautions. Number one, we will have to take only factor incomes. Only factor incomes which are earned by rendering productive services. Okay, I'll write it for you people. Only factor incomes which are earned by rendering productive services. Okay, are included. Only those which are earned by rendering productive services. I'll underline it, later we will talk about it. So are included. That means all types of transfer payments. That is what is remaining. Transfer payments, or I'll term it as income because we are talking in terms of income. It is one and the same thing, but still here it will help you. Transfer incomes like old age pension, which is given to the old age people without rendering any productive service. Unemployment allowances given by the government to unemployed youth without doing any work or rendering any productive service, etc. Okay, these are excluded. So that means first part of this number one precaution is to be included, the second part is to be excluded. Only factor payments which are earned by rendering productive services are to be included, while all those payments which are made, or transfer payments that are called, without rendering any productive service are to be excluded. So please bear it in mind, the first part is to be included, the second part of this definition is to be excluded. Second, we can talk about the second precaution we have to take is the sale and purchase of second hand goods. Sale and purchase of second hand goods. So it is from the very first part itself. Sale and purchase of second hand goods is not included because these goods have already been calculated in the previous productive systems or productive cycles. So sale and purchase of second hand goods are excluded. But when this sale and purchase of second hand goods is made, if you are making it through a broker, that brokerage, etc., that commission which is rendered as, or which is earned as an income, this is something new. That means the parts which come as afresh to the productive system are to be included. That means these sales proceeds of shares and bonds are included, etc., in it, are to be included. Say I have given an example of car which I sold after using for 2 years. The value of that car is not to be included, while the brokerage, okay, which a broker earned on it is to be included, because it is something new. It is his income. It is his income in this very particular productive or financial year. So third precaution we have to take is imputed rent. I have made you people understand in the previous lecture what is imputed rent of owner occupied, rent of owner occupied dwellings or houses, and value of production for self-use or self-consumption are included. Okay, so are included. But bear it in mind, it's very important here. But value of self-consumed services like our mothers who are working as housewives, it is not to be included. So self-consumed services like those of housewives. Is not included. Fine. So they work, they give their time, they a painting made for the purpose of fun and recreation is not to be included, but a painting made for resale is to be included. Okay, the things like that. Our housewives, our mothers, sisters, etc., who are working at house, they render the product to say this is a service, they render services, but these services are self-consumed, so these are not to be included, while the imputed rent of owner occupied dwellings, etc., is to be included. Last, fourth we can talk about is windfall gains and etc. There comes something income from, I'll term it as income from illegal activities. Income from illegal activities like exactly smuggling, gambling, black marketing, etc., or any windfall gains like windfall gains means the lotteries, etc. It is not to be included. Okay, income from illegal activities, etc., which I was saying, not included. Please bear it in mind. Okay, fifth is the last precaution we have to take, and fifth we will talk about is direct taxes. Such as income tax, which are paid by exactly employees. Direct taxes are paid by the person on which it is levied, that is an employee. If he is earning a salary and his salary is transcending or crossing the limit of the tax slab, then he will have to pay a tax. He will have to pay that tax. That is why it is a direct tax, and income tax is the greatest example for the direct tax. Okay, employees from their salaries. And second one is the corporate tax. Who pays corporate tax? Exactly, paid by joint stock companies. So these joint stock company has to pay it from its profit. Okay, so guys, this is to be bear in mind that it is to be included. And then what is not to be included? Okay, if the direct tax is paid by the persons themselves or the employees, and the corporate tax is paid by the joint stock companies, etc., is to be included. But there are certain things which are not to be included, such as those taxes are called as wealth tax. I'll answer why it is not to be included. Okay, then there can be one more example, gift tax. These are excluded. Wealth tax is paid basically from your past savings. This is deemed to be paid from your past savings and past acquired or accumulated wealth. So it is not to be included because we are talking of the current financial year. As the sale of second-hand goods, the sale of good has taken place somewhere else in a previous year. Now it is being sold. So that value is already calculated in the previous year. If something new evolves, that is to be included. So these are the precautions, dear students, we must take before we talk of the income method. So before we end up and we come up on to the numerical parts, let us just make it a bit concrete by understanding. We are talking about the factor incomes, and that factor incomes when put together become the domestic income. Okay, we must here understand what is domestic income. So I have made a chart for you people, so you people will be able to understand it really very properly here that what do we mean by when we say the domestic income. So we will look into the components of domestic income. As you can see on the screen itself, that components of domestic income, NDP, FC, are number first, compensation of employees. This compensation of employees is paid in cash or in kind. Salaries are paid in cash or kind. I am being paid a salary and given a quarter to reside in by the company and asked for no rent. That is my compensation, but in kind. So compensation in cash in kind. So compensation of employees included. Second component of domestic income is operating surplus, that you were not able to understand when I was defining it, and I promised that I'll define it. Operating surplus is basically the income which comes from the factors of production, but in two different parts. Okay, that is income from property and income from entrepreneurship. You see, property, when we say property, land is the property. Labor is not anybody's property. Capital is property. That is why income from property has got two parts, rent and interest, because rent comes from exactly land, and land is somebody's property. It can be owned. Interest is capital. Capital means money, and money is worth anything. It is a property. So it is the part of income from property. What is remaining is income from entrepreneurship. Income from entrepreneurship from the four factors of production. We are done with first factor of production is labor. That is here. Compensation of employees. Okay. And then what got labor got covered, land got covered, capital got covered. What remains is the entrepreneur. Entrepreneur is, his income is income from entrepreneurship. That is what it is, his income, that is profit. So dear students, this profit is basically divided into three different categories. One is corporate tax. We were just talking about the corporate tax. One is dividend. Dividend is the share, is the part of shareholders in the overall profit. So dividend is paid to the shareholders. Okay. Then undistributed profit. It is what remains with the company for further expansion, growth, etc. of your company and all. So these are the parts of profit itself. That happens when profit comes from entrepreneurship. You can pay corporate tax only when profit comes. You can give dividends only. You can pay corporate tax when profit comes into context. You can pay dividend to the shareholders when profit comes from the entrepreneurship, and you can retain certain profits for say future course of actions for growth and expansion of your business and all when profit comes into context. Then the last category we are here talking about is this mixed income of self-employed. The hawkers, the small shopkeepers, the dealers, the roadside vendors, these incomes are termed as mixed income of, they are self-employed people. And it will also cover in one way or the other with the labor part, because that is also not anybody's property. So this also will cover the labor part. So this is how we break down the domestic income into different parts. So you will have to keep 7 things in mind. There are 7 components of domestic income. That are here. First, compensation of employees. You see the dotted lines going down. I have numbered them also. Compensation of employees. Compensation of employees. Number second is the rent. Number third is interest. Number 4th is corporate tax. 5 is dividend. 6 is undistributed profit, and 7 is mixed income. Why I am taking the lowest of all? Because compensation of employees, this operating surplus is itself getting divided into different parts. So it gives us a very important answer here. It gives us a very important thing to understand. That is the problem which comes in while we calculate the national income and we look into the components which are given. See, I'll use white color to show you people. Keep it in mind. If in a numerical you have been given the operating surplus, I am encircling it. The value of operating surplus is given. Then you further, when you read the components further, somewhere you find that profit is also given. This profit is also given. Or any part among these all very things, rent is given, interest is given, dividend is given, undistributed profit is given. So bear it in mind, dear students. These are all parts of this operating surplus. So please take the value of operating surplus only and forget about all these very other things. Maybe in some numerical they have given just, let us say, the profit. They have given the profit and nothing else. They have not given the operating surplus. They have income from property, rent, interest, corporate tax, dividend, undistributed profit. This is the father-son example which I have already given. Operating surplus is the father and these are all his sons. Now they have given the profit only there and nothing else is being found. So this profit is going to, if your formula is asking for operating surplus, this profit is going to represent your operating surplus. So you will take, if they are asking for, you will take this profit as operating surplus. So please keep it in mind what I was saying. These are a few important things which you should consider before you look into any numerical example. So dear students, we are here able to understand a lot of things now.